Hey everybody, let's have a little look at exam technique then on answering risk questions, which is coming not only from all my videos that you've seen, but also directly from the examining team as well. So the first thing I want to look at is different types of risk. So hopefully you're aware of these, but just in case you're not, firstly you've got business risk, and that's just the risk that the company, for whatever reason, may not maximise their profits, may not reach their objectives. Then you've got the risk of material misstatement, and I mean the risk of material misstatement still being in the accounts. So any mistake in the numbers or even the disclosures that are still in the accounts. And then you've got the audit risk, which is the risk that we missed those material misstatements. We didn't detect them, and so therefore we ended up giving the wrong opinion. So audit risk is the risk of giving the wrong opinion. Now, one thing I want you just to notice here, that this risk of material misstatement might be an inherent risk, that inherently cash flow businesses are more likely to have errors in than non-cash flow because of that lack of audit trail. Or it could be a control risk, i.e. new companies with new systems, their controls won't be as good as really well established ones, so there's more of a risk of material misstatement. Now, the auditor needs to know about those risks of material misstatement, doesn't he, in the planning, so he can plan to do some more work on those. And that's what he's trying to do, he's trying to detect the risk of material misstatement. So it's the detection risk, that's the bit that's completely in the hands of the auditor. Okay, can't do anything about the inherent or the control, but can do something about the detection. Right. Okay, so do we need to explain all of these different types of risks in the exam? And the answer is a resounding no, you don't. So it's almost like I've wasted my time, but I haven't, of course, because P papers are about they're about using the scenario, aren't they? They're about applying the knowledge, not just stating the knowledge. And the reason why I don't need to state the knowledge is A, it's not a knowledge exam, but B, often you're doing something to give to the audit partner. Well, he knows what business risk is. He knows what risk of material misstatement is. He knows what audit risk is. So don't waste your time explaining them in the exam. So, and I just want to bring it together a little bit, because you might think, well, yeah, I understand risk of material misstatement and audit risk, but what on earth has business risk got to do with doing an audit? Well, business risk leads on to the risk of material misstatement, and as we know, that leads on to potential audit risk. But let me just help you a little bit more, what I mean. Let's say a company's got new systems, then hopefully you say, yeah, well, they've got a new risk of material misstatement. Let's say the company is a fashion company and the fashion changes. Well, therefore, your stock might be overvalued, so you've got a risk of material misstatement. It might be that you've got a new product being developed. So the question is, do I put that on my balance sheet as an asset, or do I keep on expensing it while it's being developed? All of these business risks are risks to the actual business, but they also, some of them, then lead to risks of material misstatement, and we've got to try and detect that. So that's kind of how it all leads. Now, one question I've got for you as well is, well, not a question, one statement I've got for you is, never suggest how to overcome these business risks. So don't start saying, well, what they should do is get out of the fashion industry and into something else. This isn't business analysis. So no explaining business risk. What you've got to do is, well, you do need to explain them, but not explain how to overcome it, is what I mean. All you've got to do is identify the risk and explain why it's a risk, not how to overcome it, okay? And then I want to just quickly have a look at what sort of marks you'd get. If you just identified a business risk, you get half a mark. If you identified it and briefly explained it, a mark, and then you get full marks for a well-explained business risk. And so the great thing about this article and what I can show you here is that I can show you exactly what we mean by using a proper question. But just before we go on to that proper question, one final thing, only show those business risks that affect the audit. Because if they don't affect the audit, then this is an auditing paper. I'm not interested, okay? So in the next video, we're going to go through a little scenario and we'll see how to answer that scenario.